What's up, everyone? Welcome to another lovely episode of the Curious K podcast. My name is Kolapo and I'm your host. If you're joining us for the first time, Curious K podcast is a show where I meet with amazing founders, ecosystem builders, VCs, policy makers, and everyone working to make entrepreneurship thrive in Africa. And this episode features Francis Sani, who is a principal at Magic Fund. And Magic Fund is a $30 million early stage venture capital fund built by founders for founders. The fund backs founders solving daunting challenges across the globe at the earliest stages, which can be pre-seed and seed stages. And the fund has backed over 100 plus tech startups, including Mono, Oxygen, and many more. Francis, it's an honor to have you today on Curious K podcast. Thank you for joining us.
The pleasure is all mine. The pleasure is all mine. The pleasure is all mine. Super excited.
Yeah, absolutely. I mean, I'm happy we're finally doing this. So, how are you doing today?
I'm okay. I'm okay. It's Friday. It's been a good Friday in the sense that it's been a slow day, which Fridays are supposed to be, before the weekend. But when you got your to-do list for the week and you're like, it's not complete yet, and the day is slow. You're just struggling to just try to get it over the line so you can have a weekend with a free mind. Yeah.
Nice. It's a beautiful day here in Lagos. I think the weather it looks like it's gonna rain, but all
Okay.
the same, I think it's been cool. So
Yeah.
we're just looking forward to an amazing weekend.
Awesome. Awesome. How's the fall life? I think it's getting any better.
Yes, it is. I think it's getting better. I mean, you can easily drive into a gas station and get fuel.
Okay.
But in some cases, I mean, you still see guys selling black market, and I'm like,
Yeah.
wow, what is happening? You guys don't want this to settle down. I mean, who in the real sense will still want to
By
patronize you guys,
yeah.
but they're still hanging out in some of those. It is what it is. The Lagos grind and hustlers.
It is. It is. It is.
All right, yeah. So let's get into it, Francis.
Absolutely.
Can you walk us through your journey, getting into the innovation ecosystem? And I know you had like a role at CC Up. It would be great if you just tell us about that.
Oh yeah, no, absolutely. I always like to. I always use this intro format whenever I make an introduction. That I think I'm getting like I say the same things over and over again. So I always like to begin this journey in college because that's really where everything began. So in college, when I came to my first year in college, I made a kind of a vow to myself that I was gonna try to go through college without having to collect allowance from my parents, right? So obviously they still paid my school fares, still got food and all of those things from home. But I wanted to be able to go through college without having to, get an allowance from home. And that meant that I needed to find a way to make money, right? So the journey started with looking for a way to make money very early on.
Okay.
And I ran about five. I was listing it out to a friend the other day. I ran about 5 or 6 businesses when I was in college, which was very interesting because it gave me a lot of perspectives around. Just most of them were small businesses, but it helped me understand very early on. The concept of value creation. The importance to have some sort of uniqueness or advantage for you to be able to build a good business. The elements of running a good business, regardless of the scale that it's at, right? So I did, a printing business. I did an events planning business. I did an education business. I opened a restaurant at some point. I did just different writings that I could do to make money. I did it back in school. And I always thought I was going to be an entrepreneur. I always thought I would leave school and just continue on that path. But then in my final year in college, something changed, and I did a couple of events where I realized that my strengths and my fulfillment, were more focused on helping people to become better versions of themselves and helping people to build better businesses and better enterprises, right? So at the end of college, I switched focus, and I went into management consulting because that's one of the best ways for you to learn how to be able to support entrepreneurs to build businesses, right? So I did management consulting for 2 years, which was a really, really important, part of my career because I learned the rudiments and fundamentals from a technical standpoint of creation, distributing value, and just running an enterprise. While I was doing that, I was also the third employee at a fintech, a small fintech back then that I helped to grow by 1,000% within 18 months. So I got a lot of operational experience doing that as well. And after 2 years of doing both of these things, I then decided that, it wasn't necessarily focused on technology, and I wanted to learn. Like, I had some encounters that helped me to understand that technology was the future, and I wanted to be able to get capacity to be able to support technology entrepreneurs, right? So I was offered a partnership position at the management consulting firm that I was at, a junior partnership position. But I was like, oh no, like I'm just gonna go. I literally went into Lagos. I went to look for all of the tech innovation hubs. I applied to all of them, and I told them that I was ready to work for free, just so that I could get into the ecosystem,
Wow,
right?
interesting.
And by chance, actually, when I CC Hub, I had sent emails. So I sent emails to everybody, but CC Hub never got back to me. But Growth Capital did, which was, CC Hub's fund. And I had a conversation with Tunji of Growth Capital, and Tunji liked me, and he just took me upstairs to meet with Bosun. So when I went to, CC Hub, the goal was not to, work with CC Hub, but was to speak with Growth Capital. But because just by chance, I spoke with Bosun, spoke with HR that same day, did my interview that same day, and 2 weeks later, I got into CC Hub, which was very interesting because CC
I
Hub
guess
was
you didn't get in for free, right?
Oh no, yeah, no, like to be honest, when I had the conversation with Tom, who was the head of HR, I was like, yo, like, I really want to do this, I don't care. Like I had some money saved up, so I was like, I don't really care. I just really want to be able to come into the tech ecosystem. So I'm happy to work for free. And she was like, no, we don't like our people to, do multiple things. So we'll pay you, it's not too much, but at least we'll pay you. I know it was back then, 2017. I was like, okay, I wanted to
Good
work for
start.
free, but I'm getting something, so not bad.
Good start.
Not bad at all. Yeah, but that was exciting periods of my life. Being at CCHub, I joined CCHub as an analyst, but then rose up the ranks quite quickly. So also then manage accelerator programs. First managed a few accelerator programs. Called Next Economy with the Ministry of Foreign Affairs in the Netherlands, which was really good. And then over time went on to manage the Facebook Accelerator and Airbus accelerators, and lead the entire acceleration team across the continent. So that's what the journey and the background kind of looked like.
Amazing story right there. Yeah, so I mean, in running these programs, what was the experience like working with founders, right? Because you're working with founders at different stages, with different expectation. What was like, what stood out for you? I mean, during that time, in terms of your engagement with startup founders.
Yeah, to be honest, now that I'm on the VC side of things, I think about those times quite fondly, but I also think about those, there are two different, industries. And a conversation I've been having with a lot of people in the ecosystem, especially people in the innovation sector, has been how the the focus, the type of entrepreneurs that incubation programs, accelerator programs, and similar programs focus on is a different category of entrepreneurs that VCs or some other type of financiers we focus on. And I don't think there's enough understanding of the difference, and that expectations and outcomes are being set to match that difference. But to focus on that experience, the thing about incubation programs and acceleration programs is that you most likely attract either first-time entrepreneurs, right, or entrepreneurs that do not have certain privileges, right? So it's either a first-time entrepreneur who's been in some other industry and is trying to build a technology business, or an entrepreneur who's been in tech, but maybe they didn't school abroad, right? Or they don't have certain networks, so they are unable to get access to certain resources that they can use to accelerate their businesses. because a lot of the things that incubation programs and accelerator programs do for these entrepreneurs is education. It's opening up access to the networks, right? It's supporting them in building their business acumen, right? And what you will find is that a different category of entrepreneurs that would most likely not go to incubation programs or accelerator programs would be entrepreneurs who are privileged and have some sort of access, or they have some sort of experience working at big tech companies, or they have access to networks that they can use to get resources that they can use to more or less buffer the downsides that they don't have. So to answer your question more directly, it was really, really good experience because it helped me to understand how to work with first-time entrepreneurs. It helped me to be able to, because it's a much harder task working with someone who's never worked in tech or someone who's never built a large-scale business before, because they're literally learning everything as they go, especially if you then add on top of that the fact that they're not privileged in the fact that they don't have access to certain networks. So they have to go the extra mile to be able to build a really good business, right? So I would say like just being able to go through that process. I think for me, the challenge I usually have is that the expectation at that point is people expect incubation programs to have the same success rates as a VC funded company or something like that. But it's different because the category and the caliber of entrepreneurs are different, right? So it's understandable if the success rates are lower there, but it does not mean that those programs are not important, because now I look 5 years later, a lot of the entrepreneurs back then whose businesses didn't eventually do really well, one of them is raising a $10 million Series A currently. A couple of them have raised multi-million dollar rounds recently that I know of, and those were people that I worked with back then. And I'm looking at it now and I'm saying, in many cases, it's not the business that they were working on back then that they eventually, succeeded with, right? And it's just the way it is. It's just the way these things happen. So I think just being conscious of the dynamics is really important. But that period of my career, learning how to support, entrepreneurs at the earliest stages of their career and helping them get to the point where they could eventually then run the business on their own was incredibly exciting.
Yeah, amazing. So how did your transition to like a VC role? How did that happen? Was that like a conscious effort that okay, now it's time for me to switch gears?
To be honest, that's a really interesting question because it wasn't a conscious effort. It was almost coincidental. So when I, planned my career back, when I constantly review it. But, in 2019, 2020, before 2021, when I was thinking about it, the part I was thinking of was, okay, I'm working at CCR. At some point, I was focused on Nigeria, but eventually as CCR grew to become one of the largest innovation centers on the continent, it meant that I got to work with entrepreneurs across the entire continent. And I'm always someone who's always, always striving for more. So the next phase for me was going to be a global opportunity, something that allowed me to work outside of the African continent, understand Latin America, understand the US market, understand the Asian market. So that was what I was thinking of. And the way I thought about it back then was, I was going to go either to Europe or I was going to go to the US and work at somewhere like YC or Plug and Play or some global accelerator or the innovation arm of some global company, right? So that was the thinking. But eventually, just like coincidentally, by the time a friend of mine introduced me to Goke, who at the point, where we met, Magic had just, they were just, the fund one, we're just finishing investment as a small vehicle, and they were now raising this multi-million dollar vehicle, and they were like, oh, this is what we're trying to do. We want to be able to build this at this stage and execute this at this stage, and it was going to be global, right? And I got recommended to Goke, and we had a conversation, and there was a lot of alignment. And I was like, okay, this is coming about, because I always thought I'll get to the VC point about 5 years from now, as at 2021. So it was like 5 to 7 years earlier than I expected. But it's been incredible. I'm really glad I took that leap because I had some options, and the alternative would have been to, go the other path that I thought was going to be the better part, which is working with a global accelerator. But the switch to the VC side of things has just given me a whole different perspective, because now I have an experience from an operator standpoint, I have experience from working with entrepreneurs from an incubation and acceleration and innovation design standpoint. But I also now have experience from a VC standpoint, right? Which is just really good perspective.
Best of both worlds, right?
Kind of, yeah, yeah, yeah. If you get what I mean.
So tell us about your role at Magic Fund, and if you can go down a bit and tell us about like the fund's investment thesis as well.
Yeah, no, absolutely, absolutely. So I joined Magic to essentially, manage the back office alongside the operating partner. So my day to day is heavily focused on, because we have a very unique fund. Most funds that you have, especially at the fund size that we're at, which is sub 50 million, you typically have, 2 to 5 partners at the most. But in Magic, we have, more than 12 partners globally, right? And all of our partners are full-time founders, right? Which is, I'll come to the thesis and, I explain why, we approach it with that strategy and why it's worked really well. But what that means is because all of the partners are not full-time on the fund, it means that there needs to be an efficient back office that is able to enable the partners to do great work, right? So my entire mandate and work day in, day out is to build an efficient back office team and back office process and procedure and organization that ensures that across all of the markets that we operate in, we're able to perform efficiently, right? From a process standpoint and the like. However, because of my background in the ecosystem as well, it also means that I also sit on the Africa investment team as well. So I support the African general partners with making investments and very quite active in the deal making process. So I do a lot of investment work alongside the ops work that takes most of my time. In terms of the thesis is very simple, and it's also one of the most unique thesis when you think about it, and something that's becoming more popular nowadays. And it's simply that at the earlier stages of a founder building a company,
Mhm.
the pre-seed stage where you're trying to find product market fit, some of the most relevant people who will be able to help you think through the hardest questions, who will be able to help you do the hard things like, figuring out who to hire, figuring out your product strategy, figuring out how to fundraise, how to structure your fundraise, what kind of investors to bring in, all of these different complexities. Some of the most valuable people to help you with that process are other founders who have gone through that process themselves, especially if they're even multiple time founders because they've done this over and
And
over
all.
again, and they're not speaking to you from a textbook standpoint. They're coming to you from an empathetic standpoint, not just from an understanding of the process, but they're also able to empathize with the dynamics that is just different for everyone, right? So the entire model of Magic is we have really great partners who are all multiple time founders and operators, meaning that they've a lot of them have run multiple companies and exited multiple companies, right? To give an example, so our lead partner in Southeast Asia is Andra Quick, and he's the CEO of Payfers, which is likely going to be a unicorn this year, and it's the largest, mobile bank in Southeast Asia. So this is someone who has built a whole unicorn from the ground up, right? He's going to understand a thing or two about how to build a business, especially at the
Yeah.
earlier stages. All right. Our partner in Latin America, similar thing, same thing in the US, same thing in Europe, same thing in Africa. All of our partners are operators who have been through the process. And we believe that at that early stage, having these people who understand and have gone through that process be with you, be on your cap table and support you through the earlier stages is incredibly valuable to founders. So at Magic, it's a collective. We even like to position ourselves more as a collective because we're more, we're in the founders' corner because we are founders, right? So it's a collective that is built by founders and is designed to find some of the very best founders out there across the world and support them, right? The other unique thing that I always like to point out is that we're local, right? So we're one of the very few global funds where the partners are local. So in most cases, what you usually have is a fund wants to set up and they'll go find, some investment professional or somebody in the ecosystem, to lead the local operations. But in our case, The partners are people who have built businesses in these different ecosystems, if you get what I mean, right? So they understand things from a local standpoint, they understand the local context, they understand the local dynamics, and that helps with finding the companies, it helps with evaluating the companies and just the all-round process around, investing.
So can you tell us about some investments? Have you made investment in Nigeria or maybe other countries in Africa?
Oh no, absolutely. So with our fund one, we invested in about 13 companies across the continent. Last year we did 9 deals across the continent. This year we've done 2 so far. So we're very active, very active on the continent. We absolutely love all of the companies we've invested in. All right, so there are hardly any favorites because all of them are building incredible businesses and they're all amazing, founders. But to give you an example, so we invested in Bamboo at one of the earlier stages. We're investors in Money Africa, which is one of the ones we did last year. There's Brass, which is the digital bank. There's Carrots. There's Instant Rad. We invested recently in Clamp, which recently announced, and they focused on BNPL, right? So these are some of the investments we've done across. Just to give a sense, folks a sense of the kind of while we are sector agnostic, we try to focus on certain um, sectors, right? We have preference for certain sectors, but if we see a really great deal, a really great founder, a really great company outside of those sectors, we're going to invest in them. But some of the key sectors we focus on, obviously, fintech is huge
Right.
globally, right? So there's a really good focus on fintech. We'll also invest heavily in health tech as well, healthcare as well, but also, B2B software tools or enterprise tools, because especially as digitization increases across the continent, those would continue to, play a very important role in the, just in the general growth of enterprises across the continent. So, for instance, from an enterprise standpoint, there's vendors which we invested in, which allows restaurants to be able to get their produce very easily, and they've grown amazingly over the past year. There's Start Kitchens Group, which on the other hand is which is now called Order, but they're building software for restaurants to be able to manage their processes, right? And you just have different companies across that range. So fintech, healthcare, B2B SaaS. We do some direct to consumer product investments as well, but there's also blockchain, which we've started investing in heavily across the continent, right? So those are like some of the very core sectors we focus on, but we definitely do investments outside of these sectors.
So what's your typical check size for these deals and the deal structure? There's a lot of conversation around safe notes, convertible notes. Do you just go for priced run directly? And to be great to just hear how that flows from your hand.
No, absolutely. So our typical check size, our preferred check size is usually around 150K. But you have to be malleable sometimes. So sometimes that means you have to go down to 100K. But our preference is usually around 150K to 250K. And we usually come in very early, right? Which also, speaks to the second point, from a standpoint of, what instruments do you use? Because we're coming in very early, we're coming in as one of the very first checks in. In many cases, we're doing safes, right? Except it's a situation where the company is set up the round such that they're doing convertibles. I don't necessarily have an issue with safes, especially when it's very early on. I think the challenge is when folks are doing two things. First is folks are doing high volume seed rounds, so $5 million seed rounds or $7 million seed rounds on safes, right? Number two is when they are doing those seed rounds and they're doing them with extensions, which essentially means that you raise $1 million at 10 million, and then after you raise $1 million at 10 million, you then proceed to raise the next 2 million, maybe the next 2 million at 15 million, and then maybe you then do another one at 30 million, and then the next one, is like at 40 million. So when you just stack these saves on top of each other, right? Then from a conversion standpoint, the clauses in there, it just becomes quite messy. So my advice to founders is always that, if you're going to do a large seed round, particularly, right, if it's like above 2 million thereabouts, you want to, try to do a price round, right? Or you want to make sure that you don't have too many extensions, so there are not multiple conversion times.
Interesting insight right there.
Yeah.
And what range of equity do you aim for? I mean, for priced rounds,
Yeah, so
typically.
so so our focus, is on supporting founders really early on. So it means that we're very price sensitive, right? So it means that we usually try to come in at sub $10 million rounds. Again, obviously, sometimes you have to make exceptions, especially when the company is really great. But from a strategy standpoint, to try to come in at sub $10 million rounds. Our equity ownership target is usually somewhere between 2 to 7%, right? It's a broad range, so it depends on how early we're coming into the company. So if we're coming in really early and doing a 200K or 250K check, it can go to the upper band. But if it's if we're coming in later, we're doing a smaller check, then it's on the lower band, right? But we're
Okay.
usually sure about yeah.
Great. So most of your deals, right? Because you mentioned one of your founders in Southeast Asia. I mean, you've talked about some of the investments you've made across Africa. So how do you sort your deals? Mostly, how does it work?
Yeah, no, yeah, that's a really good question. Especially for founders listening who want to reach out. There are multiple ways, right? So I'll say how we source deals, but also give advice to founders who are trying to raise money either from Magic or other VCs. And some of the very best ways to have a high conversion when you're raising. I'll put the our deal flow into a couple of buckets, right?
Okay.
The first bucket, and the one that is usually the most highest quality, is direct referrals um, from our GPs or direct inbounds to GPs. So what
So
that
what
means,
percentage is that? Can you
that's
put that
usually
in?
a high percentage. It's just even
Okay.
across the venture industry, deals that someone introduced to a partner or to someone at the firm. So it doesn't have to be a partner, to someone at the firm directly. So that means maybe a co-investor or someone in the ecosystem, or someone like just someone those working at a startup, or someone that has a direct contact with the investor. That's usually a high percentage, because they are then there are gauges you can use. So the referral, the strength of that referral matters, and it also means that if the person referring the company is a high quality person, the founders are likely to be high quality, right? So I would say that's one of the biggest ways, and what that means is that you either just find anybody at the firm, and then you find someone who knows that person, and you get that person to introduce you to that person, right? It's usually has a much higher conversion than a cold outreach. It
Mm.
is not to say cold outreach doesn't work, right? But to be honest, just because I've been on both sides of the spectrum as well, um, companies that come from direct referrals are usually of a higher quality than companies that do cold,
Mm.
because people who are referring you a company, they want to keep their reputation as they are referring good founders to you. So there's a natural filtering mechanism that has been done, especially if those people are VCs or angel investors themselves, right? So that's one way we get a lot of deals. Also an advice to founders who are looking to raise from that standpoint. The number two way would be co-investments. So that means that or co-investors. So we don't operate on signal. So what that means is that, like, I'm not going to go into a deal because this person is there, or because this other person is there, right? It doesn't work like that. So we really invest in deals that we have a high conviction in internally. But we have a lot of really great investors, either they're angel investors or other VCs or syndicates, who we actively share deal flow together, right? So we share this with them, and they share deals with us, right? And that's also a really good source of really great deals, because in many of those cases, that investor has already invested in the company, or they can't invest, but they think, they know what you like, or they know what we like in this instance, and they will be like, oh, this guy will potentially be a great fit for your thesis, right? So that would be the second bucket I'll place it in. The third bucket would be just general ecosystem referrals. So like, just general folks, just like reaching out and sharing stuff. And then the first bucket would be inbound, which would be, we actually get some really good deals by inbound. So if you go on Magic's website, for instance, now there's a simple link there where you just fill a simple form and we'll get it and our team will review it. And if we want to go forward, we'll reach out to the founders. So I would say like overall, those are some of the very first four, these are some of the four buckets, where we get deal flow. But the first two are usually, they're not the highest quantity, but are usually of the highest quality.
Mm, amazing. Yeah. So some of the deals, I mean, that you've executed since you joined the firm, how long does it take for you to typically close, or for the firm to typically close or make an investment decision? Because I work with some founders and it's really frustrating for them in terms of the process, the timeline. They're not even sure once they get into the door how long it's going to take, the due diligence process and
Yeah.
everything.
Yeah, no, I can
So
imagine. Yeah.
yeah, so what's the timeline? How does it typically works in terms of
Yeah,
closing?
so I would say like this thing varies as well. And this is so I would answer for what it looks like for Magic, but I also like to share some context that also help founders understand how to navigate this process when speaking with different VCs. For Magic, we move as quick as 2 weeks throughout the entire process sometimes, right? So it means, especially because really good deals probably have a lot of investors trying to get into that deal, right? So if you don't move fast, you're not just going to get an allocation, right? We operate on high conviction, also because at the earlier stages we're backing the founder to a large extent because the product is going to change, right? So we have things we look out for, and when we find that this is a great founder that we want to back, that we think is going to build a monster of a company in the sector that they're focused on, right? It usually means, so the process usually means that you speak with our partners. Sometimes you speak with one partner and then you have to then speak with other partners, because the way Magic is structured is we have different investment cohorts across the different regions and sectors that we invest in, so that allows us to move much faster. So everybody in Magic, so all 12 to 14 partners don't agree on each deal, right? They are split into smaller cohorts of 2 to 4 partners, which is
Okay.
much more nimble, right? So it means that one partner can bring in a deal, speak with the founder at first, and if they really like the company, they then get their other investment cohort members to then jump on a call with that founder. And usually, after that second call, the entire team would talk about it deeply and debrief and decide if they want to go forward or not, right? So at that point, we can usually communicate to the founder and say, we're really interested, but we need to do some more digging, right? So we need to do some more due diligence. We'd like you guys to send us your data room or whatever information you have, to be able to help us look at this a bit more deeper. And we'll usually look at that more deeply within, 2 weeks or less, sometimes within a week. And once we have that clarification and that clarity, we will then proceed to write our investment memo internally, right? So write our investment memo internally, and then the next step is just that memo getting approved, right? So it is after the memo is approved that we then let the founders know that, oh, we've gotten approval from the partnership that we'd like to invest. And the founders will send over their docs. When we receive, and like if for instance, like if we communicate with the founder on a Monday that we've gotten approval, send over your docs. If the founder sends over the documents that day, we'll typically sign and wire, and they will have the funds in their bank accounts by Tuesday, right? Um, so the what usually takes time sometimes is, number one, the scheduling. So if a partner meets with a company and scheduling is unable to happen quick enough, right? It means that that first stage of the process might take a bit longer, right? But then after the partners decide, another thing that also affects from a VC standpoint is if there's no high conviction and the partners need to do more digging in, it then means that they need to spend more time on due
Time.
diligence. So they probably need to speak with a couple of references, speak with a couple of your existing investors, or speak with similar companies that they know. So that's why it will take some more time. But in many cases, if there's high conviction, within 2 weeks, from the first call, the entire process can be done. And within 2 weeks, the money is in the bank accounts. So the gauge I usually use, for people, especially with Magic, is usually between 2 to 4 weeks, right? There's a deal that we closed in February that we closed within 1 week, right? Yeah, so it varies depending on the context of the deal.
Of the deal. And in the industry, based on your work, I mean, other VC firm, what's the range? I mean, it sounds like Magic is. I mean, the process is quite fast. The 2 weeks, 1 week. I think that's amazing. But across the industry, based on some of the folks that you work with, is there like a range that you can
Yeah,
put numbers to?
I'll say some people are faster. Some people are faster, especially so people that are faster are usually much smaller funds where there are smaller GPs. So if there's only
Okay.
one or two GPs, right, it means that it's easier for that decision process to be made, right? I would say that's one. Some people are also longer. People take longer in like just also so founders know if you're going to be getting a syndicate to invest, you should expect the process to take 1 to 2 months thereabouts, because the syndicate needs to go and meet their members and get interest in the deal before they can confirm the amount they will invest to you. And then they need to set up the legal entity. All of the members need to sign. People then need to wire, and that's just a lot of chasing down, right?
Mm.
So it would be unfair to expect a syndicate to move in 2 weeks, because it's just probably even operationally impossible, right? In some cases, some VCs are set up such that they have investment committees and they only meet on certain days. I know, before it used to be once a month, from a few that I know, but nowadays with the speed at which deals move, I think most VCs, and investment committees meet every week or every 2 weeks now, right? So what that means is that depending on the cadence of the investment committee of the VC, it just like if you speak to the VC today and they do meetings every 2 weeks, they will present your company at in 2 weeks time, and the investment committee might ask them to get more information from you, right? And if they come back to get more information, they have to wait another 2 weeks. You get what
Another
I mean?
2 weeks.
So it's
Yeah.
just like it's not as though they're not trying to move fast. It just means that sometimes the processes are set up that way. The other thing is if the partnership is large and everybody and the fund is set up such that everybody deal, right? It then means that everybody needs to speak with the founder or get all of the information, and they need to get unanimous approval from everybody. So I think it just varies based off of the dynamics of either the fund or the dynamics of that specific deal. But we're seeing from people moving pretty fast. I would say like a good number of people usually also do 4 weeks, right? 4 weeks is usually a good time frame, and in some cases it extends to 8 weeks. So I say anywhere between 4 weeks to 8 weeks is the average we see across the industry, but there's some people that move a lot faster than we do at Magic,
All
which is
right.
good.
Yeah, yeah, I think I think that's really good, right? Yeah, and for the investments that you make, do you lead most of those investments, and is taking a board seat like priority for you?
Yeah, so Magic is a founders collective, and the message we're trying to pass to founders is that we're in your corner and we empathize with you. We want you to be able to want to be the shoulder you come and cry on if something is going badly, right? And what that often means is, number one, it means that um, at certain ticket sizes, you just cannot lead round. So at
Mm.
ticket size that we would do 150K to 250K, except the round is a 300K, round, or a 400K round, you don't lead the round. But also, we're also not, we're not trying to, set it up that way. We're trying to be such that we're just going to put money in, right? But the most important thing that we're coming with is we want to be able to support you as a founder through this journey, right? So at the ticket sizes that we have allows us to then get into deals, a lot faster as well, because it means that there's not a big conversation about, oh, we only do $500,000 or $1 million and we have to lead the round. It's a much more easier conversation with the founders, right? So in many cases we don't lead rounds. We like to position ourselves as just being there to be able to support the founder with figuring out everything. And when you're a lead for the round and they are more or less negotiating and leading terms, the dynamic is a lot different, right? With regards to your question around board seats, the same thing applies. For most companies, we don't take board seats, right? But in a few cases, especially if the founders really like the partner, they usually ask them to become, maybe board advisors and, in a very few cases, board seats. But across most of our portfolio, it's probably less than 1% of companies that would take, board seats in. And this allows us to just be really flexible. We're not too big of a presence, you get, but we're there for the founder when they need us.
All right. Yeah. So now, let's assume an investment has been made, right? So what are like the reporting requirements? I mean, since you don't lead most of the deals, how does that work? What are like the requirements, reporting framework from startup after investment?
Yeah, to
Do
be
you get that
honest,
from the lead in most cases, from lead investors?
yeah, no. So I think the industry is also evolving. Back in the day, especially when I used to be at CCL, we usually require startups to founders to send in monthly reports. Sometimes we even send them the templates that we want them to date us, right? But what I've seen, especially globally, is that it's just different. It's interesting that back in those days, founders used to struggle to send reports, and a lot of the founders that we work with don't struggle to send reports. So it also speaks to the experience of the founders. A really good founder would want to send a report because a really good founder would want to know what the health of his business is. And the process of knowing what the health of your business is just being very clear about the things that are important to keep your business moving in the direction you want it to move. And if you have that internally, there's no reason why you wouldn't share it with your investors and partners for them to support you. If you get what I mean, right? So I find that most founders, especially the really good founders, usually don't have that issue, right?
Mm.
So there's no what the way it's usually structured nowadays is like we just want information rights. So whenever you're putting out information, we want to be able to get whatever that information is. But across the industry, what we see is at the earlier stages of the companies, the founders, so the pressure on the founder. So we don't say we want these reports by this time. No, it's usually a standard thing that the founders are already doing or they plan to do. So the founders will usually send in monthly reports in the earlier stages. That's what I'm saying. Like at the pre-seed stage, they will usually send in monthly reports. But as they get to the seed stage where there's a lot more things going on, founders will usually then switch to quarterly reports, right? Then when it's much much bigger, right, when the companies are much more bigger, then it's much more every twice a year. Obviously there will always be founders who don't send reports as well, but the way we also think about that is that because we have a close relationship with the founders, because many of these founders were texting on WhatsApp, no, we're not trying to do email, we're texting on WhatsApp, we are calling WhatsApp calls, at different times the founders can reach us. So in a way, we already know what's going on as well. So if you want to know, if a company is not sending in a report and want to know what's happening with that company, the partner who's in charge of that relationship can jump on a call with the founder, and they'll be able to get the information that they need. So I would say that the industry is evolving from being very stringent on reports to on helping the founder understand the importance of just keeping track. And if they do that, a really good founder would also share that information with their investors as well, because that's how make sure that the company does well.
Great, amazing. I mean, that reminds me of like, one of the podcasts I had with Andrew, CEO of Lenco.
Yeah.
His approach to raise the first check was consistently send a report
Yep.
uh, to people that he looks up to in the industry. I
Yep.
think he was sending consistently to Jason,
Okay.
and I can't remember the other investor. And he was doing that consistently, and he was doing that without expecting a reply.
Yep.
And someday he just got a reply from Jason, and they were able to close a deal.
Yeah.
And he credited raising his first check based on the fact that he was constantly sharing feedback, giving feedback about his company even before he raised this check. So I absolutely connect to what you
Yeah.
said.
No. Yeah.
That
And just to
a
like.
good founder will
Yep.
always know this is the right thing,
Yep.
to do
And
to.
I was just gonna say that something I've also learned from also knowing founders who struggled with this is founders sometimes feel like, so founders don't send reports when they feel like there's no progress or when they feel like things are going bad, right? Because these investors have put in money and put in effort into supporting your company. So founders often, it's they feel disappointed, and it's that disappointment that does not allow them to send reports, right? And I'll just like tell any founder who's listening to this, and my opinion on this is that the reason why you have investors and people working with you is so that they can support you, right? It's not about only sending good updates. Like the work of investors is to support you figure out the hard times, right? But if you never share that with them, you would never be able to get that support, right? So you just founders should always make it a consistent habit to share both highlights and lowlights. And if it's only lowlights, share the lowlights, and someone will jump in and want to help you out.
Amazing. All right. I mean, enough of all this VC talk. Let's
Yeah.
go soft a bit, Francis.
Okay.
Yeah. So I read one of your posts on Substack. I mean, you sold all your stuff and you left Lagos to become a digital nomad. What inspired that?
Yeah, that was that. It's been, a lot of people ask, and a lot of people, ask if I just, up and left, maybe like within a few days. It was actually, a couple of months in planning. I think a couple of things inspired it. So, I lost my eldest brother in Q4 2020. Yes, 2020.
My
Right.
condolences.
Thank you. Thank you. I think he lived a really great life, and I'm sure he's really happy wherever he is right now. But especially like I've lost people in my lifetime, but when you lose someone who is your blood and who's really close to you, it's a different perspective on life. It helps you to fully understand. It brings the concept of life being short home, right? But not life being short from a standpoint of just do anyhow, but life being short from a standpoint of we have we have limited number of years on this earth, and in many cases we don't ever get to explore beyond the things that we are aware of or the things that were shown to us, right? So a lot of people, again, not always of their own fault, but a lot of people would always live within the sphere that they grew up in, and their understanding of the world, the myths, the have will be based off of what they have experienced, but also what they have heard, right? So the average Nigerian, just to use an example, if the average Nigerian was to, talk about what they thought what a Ghanaian looked like, or how a Ghanaian acted, or what Ghana looked like, is going to be based off of hearsay or limited information that they've been exposed to. The same thing applies to what they think of Kenya and Kenyans. The same thing applies to what they think of Taiwanese and Taiwan, or they think of Indonesia and Indonesians, even if they think if they think about Indonesians at all, right? Or what they think of people in Nepal, if they ever think of people in Nepal. But for me, after like 2021 was a year where I reflected a lot more about my life and what I wanted to do with my life, right? And for me, the fact that we know so little about the world, we know so little about the people in the world. Like we grew, like you're in Nigeria, but like Nigeria is just 200 million people. We never even get to meet more than 10 million people in Nigeria, right? Talk less of close to 8 billion people across the world in over 200 countries with different cultures, different foods, different people, different landscapes. And for me, it was about I want to be able to explore as much of this world as possible. I want to be able to learn about as much of this world as possible. Where I can, I want to do that by myself and not based off of hearsay. So I've been in Ghana for 6 weeks now. And the things I have learned about Ghana, it's just incredible because, to be honest, I didn't know anything about Ghana in the real sense of it. I didn't know anything about Ghana before coming here. What I know about Ghana is 95% more than the average Nigerian knows about Ghana, right? And for me, the perspective I wanted to take it from as well was I didn't want to be so that's why I call it myself a digital nomad and not a backpacker. So a backpacker will come somewhere and stay for 1 or 2 weeks and move on to the next place. And for me, because I want to learn about the world, I plan to live in these places for about 3 months, sometimes maybe even up to 6 months, right? Because that way you get embedded in the culture. you get embedded with the people, you get immersed with the food, you get immersed with the way people do things, and you get a much richer view of the people and their views of the world. And because I'm very privileged, because I think it's a really privileged thing to do, I must say that, because I'm privileged to right now be in a role where I can work remotely from anywhere in the world, where I can also potentially afford, even though I'm still poor, afford to be able to. I'm still very poor. If anybody wants to bless me, I can send my details. Any
That's so
currency I can
funny.
accept. Any currency I'll accept. Uh,
Oh.
but because I can, afford to be able to, go somewhere, get monthly rent and survive, right? Not necessarily live a flashy life, but just survive and live. The question is why not? So I'm actually on the mission to get as many people, especially Africans, to do it, because we don't do it enough. Little about the world. We are not, there's this thing where curiosity is anti-black, right? And it's a thing, and sometimes it vexes me. We say it's only a white person who's going to go into a jungle, or it's only a white person who would hear a sound in a house, and we say, who is there, right? Or there are some things that in many cases only people from the western part of the world do, right? But it's
Yeah,
all tied to curiosity. And when you
yeah,
think about innovation at its core, innovation is a product of curiosity, right? And innovation is best when like, if this dude, what's his name, the guy that, Darwin, if Darwin never went to the Galapagos Islands and did that whole tour, like, imagine if he sat where he was and he never went there and he died. Right? We wouldn't know all of the things that we know today. So humans were built to explore. That is why the early humans on the continent, when they were on the African continent, that is why they trekked miles to explore the rest of the world. They went to Asia, they went to the Americas, right? Humans were built to explore. The human progress that we have today has been based off of that curiosity and exploration. And as we want and walk towards Africa becoming a superpower when it comes to being able to create our own innovation, it is really important for us to expose ourselves. So I'm just literally just trying to learn. That's what this trip is about.
amazing. I hear you say a lot of things about curiosity, and that just reminds me of my podcast that we are on,
Yep.
Curious Kid.
It does. Doesn't it?
I mean, it's an amazing. Thank you for sharing that. I think there's a lot of, beautiful stuff you talk about. We don't even really know ourselves. In Nigeria, for example,
Yes.
I think I met a lady from Benue. I'm like, what's her
What
name?
do
She
I?
said, Apep. I'm like, Apep. Apep doesn't even sound Nigerian. Are you sure you're Nigerian?
Yes. Can you imagine? Like, if you think about it, what do you know about Benue? Like, the only thing that comes to mind about Benue is, I know Benue is like the food basket of nations. Like, I know that like there are some plants that only grow in Benue, and there's a lot of agriculture happening in Benue. But I've never been to Benue, and I'm sure like there's just interesting things that are there that we don't even know. So for me, it's not really even about just traveling to other countries. It's about being curious about the world wherever it is that we're at. So like, I'll have to come back to Nigeria to get visas to go on the next step of my trip. And when I'm coming back, I'm like, I'm not gonna stay in Lagos, right? I'm going to go somewhere else. Like, it's not about being outside Nigeria for me now. It's about wherever it is that I am, I want to be curious about the world that I am in.
Absolutely. Thanks a lot, Francis, for sharing that.
No worries.
It's been an amazing conversation. So as we round up, is there any other thing you would like to share or talk about?
Yeah, no, like when I saw this, when you share this question ahead of time, I made a note to just write like what I wanted to say. And for me, the past year and the past 2 years, as you mentioned something about we don't know ourselves, and I know you were referring to geographic context. But in my case, a lot of the work that I'm doing, especially with my personal blog now, is in trying to help myself, but also by extension help other people focus on understanding themselves and understanding their minds and understanding their personal identity. I think we spend too much of our lives chasing success, chasing things that have been defined as a society as what we need to spend our lives doing, getting a job, buying a house, getting married, having kids. We need to sit down and think for ourselves and say, what do we really want with this life? What do we really want to be able to achieve with this life? Not from a standpoint of, what is your purpose, or what you want to be known for, or what's your social status, but it's what are the things that matter to you? Who are you internally? What are the things that you want to spend your time doing, right? And taking an active step to then start doing that. Just being a lot more self-aware. We spend too much time in the motion of things that we never truly get to understand our inner selves. We never truly get to understand, how to take care of ourselves and how to be at rest internally. Because, I heard something recently and it says that explosion only happens when there is stability. If there is no stability, there cannot be explosion. And we spend a lot of our lives in unstable moments, constantly on the move, and we never get to stability. So I would just say that everyone out there, beyond trying to business, and this is even peculiar for founders, because a lot of founders suffer because it's a very lonely journey. From a mental standpoint, a lot of founders suffer, and even employees, right? So as you build all of these things, it's important to understand that at the end of the day, it's still your life, and you're trying to live this life as much as you can. So what matters to you? You can balance it and do it side by side, and you can operate from that point of stability. So that's all I have to say.
Amazing. Thank you so much, Francis. It's been an honor to have you on Curious K podcast, and I've really enjoyed this conversation. Thank you once again for being on the show.
Thank you so much for inviting me, man.
Absolutely. Thank you, everyone, for listening to this episode. I hope you enjoyed it as much as I did. Of course, feel free to recommend this show to your friends, and see you next time. Bye-bye.
Thank you so much. Bye-bye, man.